Hello Wolfpack, welcome back to another Bitcoin video today. And we had a major monthly candle close. We talked about this in yesterday's video. And the monthly candle close was extremely important. Okay, and we talked about this in yesterday's video. Essentially, the monthly candle had to close above, in order for a bullish continuation, had to close above 19.7k. As you can see, 19.7k, of course, is the 2017 all-time high. If you extend that monthly candle across using this red line, you can see we got rejected from it here in 2020 before the bull market, and we've been holding it for support for 3 separate months. We have come now on this monthly candle yesterday, and we have actually closed below 19.7k, which is basically confirmed on a longer time frame, a breakdown from a major support level here. That's not a good sign. Okay, that's not a good sign. And look, if we're looking historically, let's look historically and say, well, what's happened historically? What happened when we broke down from a monthly support on a major level, historically speaking? What happened was here, 2014, we had a major monthly support level, we broke down, we saw a big drop, right? 2018, major monthly support level, very much more major than 2018. This actually extended through to 2020. Major monthly support level, broke down, big drop. If we are following that pattern, we should see one final capitulation here for Bitcoin over a 2-month period, which would leave us still in the Q4 bottom and would leave us at a bottom anywhere between, it could be a double bottom at 17.5k, it could be a bottom at 13.8k. The point is, what we've seen there on the monthly candle does represent the fact that we should be seeing this final move down for Bitcoin. And guess what? Who cares about the final move? What we actually do care about, and what we've been very clearly caring about for a long period of time, is the Q4 bottom. That is what we care about. I don't care about the price. I don't know where the price is going to go. I've made that very clear. I don't really care. I don't really know. If I had to guess, if I absolutely had to guess, I was absolutely forced at gunpoint to guess, I'd say 17.5k. But more realistically, what I care about is the date. And the date I'm looking at is Q4, as per the 4-year cycle theory. We've gone over this so many times in the past. The 4-year cycle theory is a date range trend on Bitcoin. I am one of the only analysts in the cryptocurrency space who identified this trend in this fashion, and the earliest to do it. And I actually don't think I've seen anyone else really do this, or maybe not until recently, not until the last month it started to pop up. But this is a clear date range trend using all of these metrics that points to a bottom sometime in Q4 for Bitcoin. And if we're looking at the actual TA itself, we can see that becomes entirely self-evident. You know, what we see for Bitcoin here is this downtrending line stemming from November. We've identified 3 major levels for a potential bottom, okay? So let's see, the major levels is 17.6k, which of course is the local low that we had in June. It also stems back from a support zone in 2020 December. And then we've got 13.8k, which if we brought up a proper chart, we could see 13.8k and 11.5k are very strong support zones for Bitcoin. In fact, let's bring up a proper chart and we can show you that. If we're zooming back on the monthly chart, for example, we'll go to the weekly and we'll zoom back. And we can see that the level, when we draw a rectangle in, between around 11.5k and around 13.8k-ish is a major support zone from the previous bear market. You can just see by drawing that rectangle in there. That is also a potential bottom. So we've got 2 potential bottoms, in my opinion. You know, I don't know which one it's necessarily going to hit. Again, if I had to guess, I'd say 17.5k, but I don't necessarily know which one exactly it's going to hit. 2 potential bottom zones, though, one of which, of course, is at 17.5k, and the other of which is between 11.5k and 13.8k. The point is, we've got this downtrending yellow line, and eventually this downtrending yellow line is going to hit those targets, meaning that the price will either have to drop down lower or it will have to break that downtrending yellow line, hence marking the bottom, or at least attempting to mark the bottom. The bottom would be fully marked when we break 28.6, but it would definitely do a lot to mark the bottom. So what we have here now is a situation on Bitcoin where that downtrending line, that compression line, compresses into 17.5k, and forces us to make a move either up or down below 17.5k on around the 19th of October, meaning that anytime between now and the 19th of October, Bitcoin is going to have to decide whether it bottoms at 17.5k or not. Okay? And then if we go down lower, for example, if we break to the upside, that's all well and good, that's a double bottom. If we do go down lower, Bitcoin will have to decide whether it bottoms at 13.8k or not by the 12th of November. And then if we go down even lower than that, Bitcoin will have to decide whether it bottoms out at 11.5k or not by the 30th of November. We have basically not very long left on Bitcoin. If we are going to see a double bottom formation, and this is one of the main topics of this video that I want to make very abundantly clear. If we are going to see a double bottom formation on Bitcoin, if we're going to see that, it will occur within the next 18 days. Very important stuff. if we're going to see a double bottom formation on Bitcoin at 17.5k, it will occur within the next 18 days. Remember that. That's extremely and utterly important for Bitcoin. Now, the S&P 500 has dropped below its double bottom formation. It's lost the double bottom. It is forming a lower low here. There is a potential chance, and not many people are looking at this, surprisingly, there is a chance that we see a support being gathered at the 200-week SMA, which of course is just below us right now. And looking back in history, that's not really an abstract thing at all. The 200-week SMA has acted as support for the S&P 500 for a long period of time, and all you need to do is look at history to see that. So yeah, there is definitely a chance that we form a support zone there at the 200. If we lose that, we'll probably trend downwards towards 3,400 on the S&P 500, and that might be the ultimate bottom. Who knows, right? We'll have to wait and see. The S&P 500 is hard to predict because Bitcoin and the S&P 500, they don't act the same, okay? They are correlated, but they don't act the same. They're not the same, and we've seen that before. Again, I'll say it again. We've seen that before. November top for Bitcoin, January top for the S&P. By the time the S&P top, Bitcoin was down 50%, 40%. Okay, so they're not the same. So me trying to predict where the S&P is going to bottom is extremely difficult. It's hard enough trying to predict where Bitcoin is going to bottom. I'm not going to try and predict the S&P. But what I can say is that it is just above support right now. You shouldn't be overly bearish on it right now until we lose that support zone. And what I can say for Bitcoin, more importantly, 18 days until we find out whether that Q4, whether that double bottom is going to hold. I want it to hold. And I think you guys should want it to hold too. Regardless of whether we think it is or not, we should want it to hold. Because look, looking at history for Bitcoin, it's very clear, right? The history is very clear. We generally see rounding out bottoms. We generally see bottoms that round out like this perfectly and then come back up. We saw it in 2018. Saw it in 2014. We want to see that again. We don't want to see a sharp capitulation and then, chop around, and then we want to see a round out. And we've already got half of that round out done. So it would be great for, the long-term structure of Bitcoin if we did bottom out here at 17.5k. I think it would be. Who knows though? We could drop down lower and round out lower. That's obviously a chance. But, to me, I just think it would be very healthy if we did bottom here. And I don't think it's exactly particularly super unlikely either. I think a lot of people are... I still think a lot of people are overly bearish. And even with that said before, that I think it's definitely possible we go down lower, I do think people are overestimating, the possibility. It's very much possible. In fact, it's like, very, very much possible. I would say it's probably 40% chance, which is almost half, right? But the point is, a 17.5k is possible as well. Yeah, we just lost that monthly support. Okay, sure thing. We lost the monthly support, and we'll go back to the monthly chart and look at it. That's bad. There's a lot of bad things going on. Obviously, you can point at the macro and say, yeah, but the point is, it's not as bad as you might think it is. And looking at the macro, looking at this chance for a 50 basis point hike instead of a 75 basis point hike rise from 28% to 46% over a 3-day period just shows you that the macro is shifting. UK shifting back to quantitative easing, UK printing money, that's good for markets as well. There's a lot of things that are shifting here. So I wouldn't say it's particularly unlikely that we see a 17.5k bottom. I understand losing that monthly support zone is a very, very bad sign, and it's probably is going to send us lower. But I still do hold by the fact that I don't think it's particularly unlikely. Regardless of what I think, it doesn't matter, right? The point is our buying plan's the same. And the point is we're going to find out in 18 days anyway. And that's something I've tried to make abundantly clear to everyone. It doesn't really matter what I think. It really doesn't. What matters is whether my predictions are valid or not, and they are valid. So my personal thoughts don't matter past that point. My prediction is very valid. Q4 bottom. That's my prediction. Now this buying plan reflects that. My buying plan reflects the Q4 bottom perfectly. I've used this downtrending line to get a better grasp on the dates, and I've used the support zones to get a better grasp on what that means for the dates, and hence I've created a buying plan based off of that. My buying plan is this. Okay, 33% at 17.5k, 33% at 11 to 13, 33% at the breakout of a yellow line. And if we don't reach 11 to 13, it's simply 33% at 17.5 and 67% at the breakout. Very simple buying plan. It's almost foolproof. And the chances of that buying plan not working, not being profitable, is very minuscule. The only way that buying plan isn't going to work out, really, is if Bitcoin dies and goes below 10k. That's, in my opinion, that's just incredibly unlikely. An absolute worst case scenario would be a gap, a big wick down to 9.6, and it would last like 2 days, and we'd fill that gap and then come back up. I really do not see sustained price action below 10k. I simply do not see it as likely at all. I don't have any evidence to support that, and I don't think many people do. And I think a lot of people who do have the evidence to support it is like Elliott wave theory and things like that. It's like, well, that's very subjective, my friend. Elliott wave theory, you know, you can say anything's a wave. This can be a wave, this can be a wave, this can be a wave. These smaller moves, they can all be waves. You can make up any bias based on Elliott wave theory. Heck, I can make up a bias on Elliott wave theory that would have said we bottomed out at 40K. You know, Elliott wave theory is not a, you know, reliable piece of evidence to use to suggest that we're going to 3K on Bitcoin. It's just simply not. So let's use the actual TA. And most importantly, the most important actual TA you're going to find on Bitcoin, literally the strongest thing you're ever going to find, is of course the date range trend, the 4-year cycle theory. So let's stick to it and let's see what happens. And if it's invalidated, cool. We stuck to the most important trend. Even if it's wrong, we stuck to the strongest trend we could ever find. That is giving you the best odds of success on Bitcoin. That's my opinion. Thanks for watching, guys. Cheers. Thanks for watching the video, guys. I want to take a brief look into the BitGet Exchange. Now, this is my favorite exchange. I use this exchange for trading personally. I think everyone in Wolves Crypto should do so. Why is that? Well, the reasons are very clear in my opinion. First and foremost, it's 5 times cheaper than Binance, and Binance is known to be the cheapest exchange. It's also non-KYC on your personal end if you don't want it to be, and that obviously stands true to the values of cryptocurrency being decentralized. You can also KYC if you want to make it easier for tax reasons, but if you don't want to, you don't have to. That means that it is available globally, so everyone in the world can access this exchange due to the fact that it's non-KYC, which is great. It also has a protection fund, which is a very important thing, right? Because you know, exchanges get hacked all the time, and people get hacked all the time by people in their personal lives. If you do get hacked and something happens, you can make a claim to that protection fund. They've got over like $200 million in reserve, so that if you make a claim and your claim is accepted, you can get that refunded into your account. That adds extra security to the exchange as well. And then on top of that, it's got a reward center that's available with my referral link, and you can gain access to over 4,000 USD in rewards. And I think just a temporary time frame, there is an extra little bonus thing going on. If you sign up to the exchange, use my referral link, and you do one trade, you'll get $10 deposited into your account, regardless of whether that was a profitable or negative trade. So go ahead and sign up to the BitGet Exchange, use my referral link. It really helps out the channel, and it definitely helps out yourself. This is by no doubt, by no stretch of the imagination, the best exchange I have found in the cryptocurrency market. It's so good that I actually reached out to these guys for a partnership. They didn't reach out to me, so check it out. And then we've also got the Crypto Academy, and if you're interested in becoming a trader, if you're interested to learn how to trade, to learn how to do TA, to learn how to identify market patterns, etc., and navigate an exchange correctly, you can sign up to this course, Become a Trader, a 10-unit course. This course is, of course, developed by myself and Megawell Crypto, who's a fellow analyst in the space that a lot of you already know. We work very closely, and we work closely using our 2 separate perspectives on the market to create one very consolidated, very concise course that is no doubt extremely useful for anyone wanting to become a trader or anyone wanting to improve their trading capabilities. We've got 10 units. All of these units have been critically analyzed by ourselves and also people we know in our personal lives, and we found them to be completely coherent and completely effective in teaching people how to trade. We use different learning strategies, for example, visual learning, verbal learning, practical learning. We've incorporated all of that in, and this is by no stretch of the imagination the best course you're going to find on the internet for cryptocurrency education. So go ahead and email us here at Crypto Academy Courses to find out more information. Without further ado, I'll end the video there. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.